right now on our panel discussion, which is going to be on blockchain and digital assets and investors' perspective. While crypto assets has garnered a significant attention from media, financial analysts, governments, regulatory institutions, and investors over the past 2 years, we explore strategies that the most prominent VCs and hedge funds are deploying to generate investment yield within the cryptocurrency ecosystem. Well, ladies and gentlemen, for our speakers and our esteemed panelists, we have with us William Bao, being the general partner at SOSV. We are joined by Hough, the digital asset portfolio advisory Coinstone Capital. We're joined by Alexander Lange, the founding partner Inflection VC. We're also joined by Andrea, Bonaceto, the founding partner and CEO, Eterna Capital. And this entire panel discussion is going to be moderated by Joeri van Geelen, the managing partner, APAC Prysm Group. So thank you so much to our esteemed panelists for joining us and being a part of the World Blockchain Summit Global Edition. Well, with this, I'd like to pass it in the able hands of our session chair and our moderator, Joeri, for taking it forward with his esteemed panel. Over to you.
Thank you so much, Bhavana. Very excited for this panel, especially because I know most of you out there in the panel and also have met you, and we're in regular touch. So I know that you have a ton of wealth of knowledge to share here. So a little bit setting the scene, and also having tuned into the panel just now, I will try to give it a little bit of a different twist, so that we cover a little bit broader and then get into specifics where I see that for the audience there will be a complementary fit with what was addressed in the former session. So really setting the scene, when looking at where the digital asset space has gone, guys, like Bitcoin obviously starting at a cent in 2009, 2010, and Ethereum having ICO'd at 7 cents, and now like basically being at 20K for BTC and $600 for ETH. There's huge multiples that are being achieved in the investor space. So overall returns are potentially massive, but at the same time, there's a concern when looking at volatility, right? So for the scope of this panel, I really want to zoom out and take a generic look at where the blockchain space currently stands, and then to really zoom in onto the state of the market today. And I think the intention should really be that we educate the audience on both the perspective of the digital asset space, but also the risks in the space, right? So I would like to invite all of the speakers to ideally keep like a minute of answer, ideally 1, but maximum 2 minutes, so that we can cover a wider range of questions. So having watched the last panel, I would actually like to start with a discussion that I had privately with Alexander last week. And this is essentially zooming out and looking at the generic trend here. So as I am looking at the markets of modern innovative tech, then you can probably put blockchain, DLT, digital assets somewhere in the broader tech spectrum. Like my take is that we are actually moving towards an autonomous economy, and IoT, Internet of Things, AI, distributed ledger technology, and digital identity, they will all play a role to move towards that more autonomous economy. So when looking at IoT, it's basically physical assets that will become digital. When looking at AI, it would be AI making decisions and pattern matching. And then DLT blockchain is like a trustless technology between untrusted parties. And then you probably need a digital identity, right, to partake in that economy. So what I would like all of you to briefly reflect on is, where do you currently see the state of the blockchain industry in that wider tech landscape, looking at IoT, AI, and digital identity? Starting off with you, Andrea.
Yeah, sure. So I think we are quite in line with what you just mentioned. We think blockchain is a synergy technology with AI and IoT. So we see a society where devices are all connected, they collect information. This information is then analyzed by an AI and then stored on the blockchain. I think that in a context where data is growing exponentially, you have to think that around 98% of the data ever created in the history of the universe has been created over the past 2 years. So of course, it doesn't really make sense to store that information on centralized entities, right? So you need to basically define a new paradigm. And I think now we are at the cusp of the change. So we are moving from the old world to the new world. And it's important that in this transition, things happen smoothly. In terms of blockchain specifically, I think that a couple of years ago, the main bottleneck was in actually creating a blockchain platform that would be scalable, secure, and decentralized, with the issues that we had in Ethereum back then. I think now you do have a sort of oligopoly of blockchain platforms with different characteristics. And if you have a decentralized application, you can just pick and choose based on what you want to optimize for. So I think we are now going to see, and I think it's the most interesting period now, because you're going to see the next Amazon on the blockchain, the next Facebook on the blockchain, the next Airbnb on the blockchain.
Fair enough. William, maybe your take out of Asia.
Sure. So I think the main change that we've seen over the last 5 years is we've moved from a lot of theory to implementation. As investors, we don't have an unlimited time frame. I mean, we're actually a pretty long-term fund, 10 years plus 3 years. But we're investing in companies that have long-term opportunity, but also can make a short-term impact. For example, identity. We invested in a company called Verismart. They are creating a data marketplace where the data does not actually exchange hands, just the ability to query that data. They're leveraging blockchain to do that. And they have actual real customers. So they're hooked up with 15 banks. They're serving telcos in India and the Middle East. So you're actually seeing the rubber hitting the road with real applications, and they have revenue. Now, is this decentralized? Well, it's half part centralized and part decentralized. It will grow into something that I believe will be extremely powerful. But right now, it's almost taking a technology and solving a very traditional problem, especially in this era of privacy, where data, sending people's data across the internet is not something that people are particularly interested in. So we're really coming into implementation time, and it's super exciting.
Awesome. Well, on that note, I had a call with you, Thijs, yesterday. Maybe picking it up from here, because William has been mentioning data. Your view on blockchain amidst all the other technologies earlier mentioned.
Yeah, well, blockchain is of course going to have an impact because it's generally a very, very strong enabler. Yeah, but if you go into the IoT space at the moment, there's always going to be there's challenges in the IoT space if it comes to digital physical interfacing. Yeah, and that's a hard challenge. Yeah, which is difficult to solve. On the digital identity space, you've got political challenges and basically platform creation challenges as well. Yeah? It doesn't mean that it's not going to happen. It just means that it's very, very challenging. So I would say in the shorter term, where I'm the most excited about blockchain tech space right now, it's just a very, very important business model enabler. Firstly, you've got this way of transferring value. You've got this way of making people part of the platform by participating in either working or tokenization. And then, of course, you've got ways and means to transfer digital value to each other. And so it's a business model enabler for me at the moment. And I'm really looking at it from that angle.
Fantastic. Thanks, guys. Alexander, over to you.
Yeah, I can only mirror most of what you guys already said. So how I see it on an extended timeline really is that this industry is growing in sort of concentric circles, right? So we started with Bitcoin as open money, and from there evolved into what now is called open finance or decentralized finance. And we already see at the horizon the next iterations of that could be described as open web, for example, where the ID pieces and open data come in, but then also open media. If you look at programmatic art or programmatic user-owned content in general, I think that's already like what we see at the horizon as a potential next bigger theme. And yeah, so everything else, more enterprisey use cases, be it supply chain tracking or IoT use cases, maybe telco use cases, I think are at least 5 years out, if not longer. So personally, as an investor right now, I'm more focused on these early adopter use cases, and that's primarily what I see right now in user-owned media as a broader theme, or the DeFication. There is no term yet, but really a sort of application that sits on open finance infrastructure, but actually has very different value propositions and products to offer than pure financial speculation. So that's what I'm personally most excited about in the I would say next 3 to 5 years.
Fantastic. Well, I think we have this on record. So DeFication, a new jargon term invented by Alexander. We should definitely take that forward in our space. We're actually coming back to DeFi and open finance a bit later, Alexander, to your point. So I just want to go a little bit generic to specific. So the next topic I'd like to address is the micro and the macro side within the blockchain space itself, right? So now we're zooming in on digital assets native. So when looking at where we currently stand in the markets, then obviously we had the Bitcoin block reward halving, right, in May this year. So a lot of investors argue that we're in a new cycle. And I speak to a lot of hedge funds and VC funds, strategic investors like yourselves. And what I'm hearing is that more and more institutions are coming in, right? Like this current cycle is maybe more started off and kicked off by institutions than retail. So looking at Bitcoin as the primary asset that these institutions are buying, but also all these very exciting new projects coming on board, and Ethereum obviously moving to proof of stake with their beacon chain. I'd be interested to, on a micro level, so the business level, but also on a wider economic macro level, to kind of hear your take on where the crypto markets currently stand, with institutional adoption having come in, maybe retail following later. Where do we stand? Starting off with you guys.
Yeah, well, I would say the writing is on the wall from a macro perspective. If 2020 taught us anything about investors generally, or the run-up to 2020 taught us anything, investors, especially institutional ones, they're not too interested in academic arguments. Bitcoin has had a very, very strong academic argument since 2010, and that's why we're bullish. Yeah. Same goes for Ethereum from the early days onwards. But the circumstances were created in 2020, where it basically just drove the whole idea of like, okay, the value is actually there. It's not academic. It's on your Bloomberg screen. You can see this, and that's where it went. So now the big question is eventually, if the institutional investors come, which they will, and the writing looks on the wall, ceteris paribus, of course. Next question is that money going to flow into the altcoin space? Classifying Ethereum still as an altcoin, the question is how and where. And then eventually it boils down to, what is the next story going to be? Where are the drivers going to be that make a certain application of blockchain technology basically as helpful and as broadly aware and as fashionable, between brackets, as Bitcoin is going to be in 2021. And I'm very, very interested in the space in a certain degree. I don't want to run over my time, and maybe we can bring that up in another question. But that's my take on your exact question there, Joeri.
Fantastic. Anybody that would like to build on top of what guys has already been saying, either micro or macro?
I think from my side, like one very important point is that this time, basically the next phase of growth, I think, is driven by real fundamentals. It's no more something speculative as, the previous run. When we see the likes of PayPal opening up their network of digital assets, this means millions of people are now able to use digital assets to actually buy goods. You have the CIO of BlackRock that, previously, of course, they were all very cautious about saying something about the space, now saying that digital assets are here to stay. So I think these are important statements, and you have a lot of corporate adoptions as well coming up. So I'm very optimistic on the next phase, because I see that basically this growth is happening for the right reasons.
Fantastic. Alexander or William?
Yeah, sure. So I mean, we're basically looking at it. I come from a traditional finance background, although I was a history and government major in school. So we look at the history. You know, you had the traditional exchanges where you could buy stocks, shares in companies, you know, in the 10s, 20s, and 30s, 1910s, 20s, and 30s. It's been around for a while. And then we moved to, you know, more complex products, not just trading. For the 2 points I have, one is that a lot of the institutional investors, they're looking at this as just another product. If you're really old like me, you know, Eddie Murphy movie called Trading Places, and they're really into something called orange juice futures. I mean, the product doesn't really matter. What institutional investors are looking at is volatility. And the main thing that's driving a lot of my old hedge fund clients into this space is volatility. Volatility is the product. It's where the opportunity is. And that's why a lot of them have been getting involved. The managers are pissed off because the traders on the desks are making more money on crypto in their PA than they are for the fund in their, you know, in their day job, so to speak. So there's interest there, and now that you've got some very large Bitcoin traditional funds saying that they're active in this space, it opens the door for CIOs of bigger hedge funds to get involved. So we see a pretty big trend happening now. The second thing is the move to products. You know, from those traditional stocks on an exchange, now we're looking to financial products. I don't know what it is today, but traditionally S&P 500 ETFs or, you know, exchange trade funds are the same size in terms of value as the entire stock market. So the product is bigger than the underlying. I think you're going to see that taking off in crypto. We're already seeing that taking off.
Yeah, I'd say you're certainly not old when being participating in this new economy, William. So Alphaville made a great song about this, Forever Young. And as this technology is progressing forward, I think that will be the case. Alexander, any closing comments from your side, either micro or macro?
Yeah, just on the macro piece. So talking about institutional adoption, I think it's still very much limited to Bitcoin as of now, and it's driven by two major aspects. So one is shift in sentiment, right? We were basically going from red poison to a global reserve asset in a matter of a year. So what probably will have spillover effects within finance, within more institutional environments, and midterm also again will include retail, or the next wave or trigger the next wave of retail adoption. And the second big thing is probably market structure, what also looks fundamentally different from how it was in 2017 in terms of spreads, in terms of actors in the ecosystem, in terms of the quality and optionality with service providers and many other aspects. So I think the next few years we're going to see a pretty big wave of institutional adoption, what will then basically circle around and include the next wave of retail users, and then hopefully we'll get them to non-financial use cases as well.
Fantastic. I think that'll be a good bridge to move over to DeFi as we're talking about wider adoption. And decentralized finance, or as earlier referred to, open finance, will hopefully allow more people and mainstream to partake in that new economic niche that is currently progressing across the space. So when looking at all these new initiatives like staking, where you essentially get an interest percentage on locking your tokens and therewith securing the network, be it yield farming, just providing general liquidity, borrowing, lending, like looking at all of these use cases, I'd be curious to find out from your VC perspectives if this is really very experimental, or whether we're actually going to be ripe in this current 4-year cycle for mainstream adoption. So can you all cover a bit more about how you define DeFi and what the value propositions are, but also look at the risks like composability, level 1 scaling, regulation, right? CBDCs coming on board. So yeah, basically covering it from both angles. That's a very ambitious question to cover in 2 minutes, but let's give it a fair shot. William, start with you.
Sure. So I'm coming from more of a CeFi background. We have not so far done any DeFi, or not too many DeFi, just a few investments. When I say just a few, we invest in 150 companies a year, so we're quite active. I'd say for us, the positives are that it really opens things up. We're operating mostly in what you would traditionally call emerging markets or developing markets. A lot of the building block fundamental things like the ability to get a loan don't exist there. And so sources of capital that are interested in 12% annual interest rates, there are probably lots of people interested in this around the world and helping people get $50, $100 microloans because it has an impact and helps the world be a better place. But if the actual end lenders don't have access to capital, or it's kind of difficult for them to get access to that lending capital. So there's, I think, some big opportunities there, but in terms of end use cases for it. But I think from for most investors, they're still sort of dipping their toe in or trying to understand it. And then on the other side, well, I'll let other people talk to regulation, but I think that's a bit of a challenge at this point.
So when listening to William, it seems like a very clear forward use case here. I mean, if looking right now, your liquidity on the bank, you would in many countries lose against inflation, right? With the saving interest rates that are lower than a percentage point. So DeFi makes sense. That's what I'm hearing from William. Maybe looking at regulation and some of the potential risks. Alexander, could you pick it up from that side?
Yeah, sure. I don't even know where to start with. So there's a ton of risk involved here. So the obvious parts are technical risk. You can read about smart contract or interface bugs almost every day, with pretty severe consequences for individuals mostly at this stage. I think another more systemic risk is composability. That also has been discussed back and forth over the last few months, and it's basically describing this idea of having, so to say, open financial templates or Legos that you can easily plug together and create completely new services on top of those. And that of course comes with a downside as well, because if you build products that are relying on multiple of these money Legos, you might end up in a situation where one of these money Legos fails for whatever reason and basically is able to infect other parts of the ecosystem. And as a consequence, you'd rather end up with a finance Jenga than finance Lego. So this is still something, the community struggles with. Regulation, I think, is a little bit of a separate point. It's not primarily targeting DeFi. As of now, you might have seen the Stable Act attempts to regulate, especially cash representations on chain. So that was one smaller piece, but there are also ideas of regulating self-hosted wallets, what would have very severe consequences, not just for DeFi, but for every kind of data set that sits on these new open ledgers. And then more long-term, I think another big risk factor in the end that roots back into technical risk or OPSEC risk in generally, and that's privacy. So you've probably seen the IRS hacks recently, and Zuko was tweeting about this in a very interesting way, as he says, that privacy-preserving technologies in the end are much more protecting the innocent and broader masses from criminals or other foreign governments in that case, then they protect criminals themselves in the first place. And I think this is a very big narrative that will come, but might be 5 years out. And related to it, I also see a very big risk if basically all our like wealth or whatever you wanna take to describe it is publicly out there. It's very easy to target you in the physical world as well.
Interesting. Yeah, then at the same time, we're reading on the coin desks and the coin telegraphs of this world, many banks moving into custody solutions, challenger banks, but also traditional banks. So are these traditional banks actually interested in DeFi? Can you give this your best insight, Andrea?
Sure. Yeah, I mean, as you mentioned, there are large providers that are looking at, the custody of digital assets. I think this is a need, they now see in the market, people want to invest into that and they need to provide a solution. I think right now is riskier not to get involved than getting involved because the upside is very large. So you do need to diversify and basically move part, I think at least a very small percentage into this asset class. I mean, I think, DeFi is an extremely interesting trend and we see, large organization as well getting involved, of course, at different levels. Like, I think they just pick and choose what they need. I think it's, DeFi is a very broad space that has many good things into it and even bad things into it. For instance, at the beginning, you mentioned about the farming. Personally, not a big fan of farming itself because I think you pretty much create a fake token out of the blue to motivate people to hold a token. I was actually reading about an interesting view around that of actually using non-fungible tokens to actually incentivize people for holding a certain digital asset, which basically becomes a sort of a loyalty reward, right? So really is a very broad topic. There are many elements, to it. But in general, as with every innovation, I think there are positive and negative aspects. I think is a very important trend that we're looking at it very carefully. Also, we're very closely, with the platforms that are quite, relevant for DeFi, such as Igorand. We're running their accelerator here in Europe. And these, are, I think, the building blocks for the 3.0 financial infrastructure, basically. And now it's very interesting, as I mentioned in my previous answer, to observe and have the possibility to invest in companies that are actually building applications for these solutions.
Cool. Yeah, and you're actually touching the topic that I wanted to ask Gijs about, like specifically zooming in within the DeFi space, and that's digital collectibles. So I remember Alexander earlier saying the tokenization of art, which you could consider a collectible, a piece of art. I know that you're pretty knees deep into exploring NFT investments and deployment of them. Gijs, so how do you see that, like data and NFTs in the current state of things? Is that ready to scale?
Well, one thing about the NFT standards and one thing about DeFi in general, just to touch on the points that the other guys were making as well, it's like we simply have no other choice than to experiment with this. If the Wright brothers just decided after their first crash, like, I don't know if this flying thing is for us, then somebody else would have picked it up anyways. So that's just how it's going to happen. And yeah, mistakes are going to be made along the way. But then on the other hand, it's also great to see how you can innovate yourself out of problems as well. Yeah. In the sense of you can innovate yourself out of problems as well with regards to like what Nexus Mutual is now doing on the insurance side. Very, very interesting. But to come back to the NFT part of it, I feel that like when Alex was mentioning smart contract risk, a lot of the times from a technical angle, a lot of the complexities that happen at the smart contract level can actually be managed by specializing a more generic smart contract at the NFT level. So for instance, insurance premiums, these types of things. And so that's going to be a very, very big enabler in that regard. Yeah. And then secondly, it's also going to make the tokenization of data flows or access to data sets and very specifically fine-tuned ones, not just necessarily for regards for costing, but also with regards to privacy and these types of things. I feel that's going to be a massive enabler. And the nice thing about it is NFT also has a very, very intuitive use case to it. You probably heard about Bumble, or what his name is, that had that sold millions of art worth art in 48 hours. And that's also very, very nice, because that also drives the understanding forward a lot quicker. Because one thing we shouldn't forget, blockchain technology is a network technology. And the more people actually know how to use it and understand it and get enthusiastic about it, the quicker it grows.
Fantastic. So I think that we have covered products, right? But maybe let's now scale into the technology, because over the last few years, Ethereum, like there's a lot of critique that it's not scaling, right? Now other layer ones coming on board, like Polkadot, and Polkadot having the Parachain launch probably at the end of Q1 next year, and then mainnet in Q3, and then you would have the Parachain sort of being in connection with the main relay chain. In Ethereum, you essentially have the same thing with sharding, right? And then you would basically have these shards all roll up to the main beacon chain. So we can talk products for hours, but what if the technology that we're building on is not scalable enough, right? So maybe reflecting on specifically Ethereum and Polkadot, Cosmos, maybe from your side, Andrea, on Algorand, like where do we stand? And is this actually ready for mainstream adoption if the technology is not yet scalable? Starting with you, Andrea.
Yeah, I think that's a very important point. And actually with our first fund, which we launched like around 2.5 years ago, we were focusing specifically on the protocol and infrastructure layer, because I think at that point, that was the main bottleneck with the technology. I think right now, of course, there is still room of improvements in the infrastructure space, but you do have a few, like key players that are conquering certain parts of the market. So basically see it evolving as a sort of an oligopoly where everyone just picks and choose whatever they need. And I think that now you're pretty much at that point. I think an issue, with platforms like Ethereum that were basically first movers that unfold the potential of smart contracts is that they were designed in a certain way. And then, it's difficult to change these fundamental designs element as you go, right? Whereas Polkadot, Algorand, Cosmos, and others, they know what are the issues of the first movers. And they actually, from day one, address these issues in the design, like at really a very deep level. And this happened with the internet as well, right? In the end, you had the second movers that were the ones that actually brought everything to the next level by looking at the mistakes of the first movers. So of course, I hope that, Ethereum with Ethereum 2.0, moving into proof of stake, managed to address all these issues because they have a very large community of developers and they're doing many amazing things. DeFi is mostly on Ethereum, right? But then we should also understand that there are platforms like Algorand and others that they basically have solved this trilemma of being scalable, secured, and decentralized. And I think, they're gonna coexist together with Ethereum and a few others. I don't think there'll be like thousands of platforms or hundreds of platforms, but there'll be a few very good that are, the choice of basically the players. And one last thing I want to mention is that, for example, in the case of Algorand, when you talk about adoption, you want to have enterprise adoption, right? One important thing is you want to have some sort of stability of these platforms, right? First of all, from a technological standpoint, we have heard that some blockchains actually stopped working, they had issues, and they just stopped. I don't want to mention any name, but you probably know what I'm talking about. And that's a problem if you're an enterprise, right? And as well, the forking element. Of course, there are pros and cons, with the community, etc. What if they want to move to a new chain? But in the end, if I'm a corporate, I don't want you at a certain point, to fork the network and go somewhere else, and me to bet on chain or another. So these are things that you need to basically take into account. And if you're a corporate, you probably go for something like Algorand or others because of these characteristics.
You're addressing an interesting one, enterprise, because I'm in touch with a lot of digital innovation leads within enterprise. And what I'm kind of seeing is that they are building on top of Ethereum and generally like proof of authority, where certain management layers are still mapped into the architecture for approval transactions, right? But then also an enterprise like scaling some of these solutions so that it's actually adding to the bottom line. which makes it sustainable for an enterprise to keep on investing. Like how are we going to tackle this? Alexander, maybe to you, enterprise adoption with scalability still being fairly compromised.
Yeah, I think that's a really, really tough question. And as I said earlier, I don't think that enterprise adoption is the next theme around the corner. I think it's a few years out exactly for that kind of reason. So you can probably think of it in two big pockets here. The first one would be short-term experimentation, and there we have all these like various different approaches, even within Ethereum, with different ideas of how you can scale on layer 2 with Aztec and rollups and Starkware and others. So that alone is a universe for itself, and then you have as a second category players that are innovating in interoperability like Cosmos and Polkadot, and then as a third one you might see things like Near or Avalanche and other layer 1 alternatives taking off, but probably for very specific use cases like Flow, for example, for gaming. And I think in the near term, next few years, it's impossible to take any bet on any of these core infrastructures. You can only have a risk adapted probability measurement in place as a builder and also as an investor. So value capture would be a whole different topic to talk about as well. But that's how I see it, at least in the near term. And then in the long run, I think we're going to see more of a standardization around the core infrastructure for rather general purpose use cases, and then some specific ones where needed, and they will be interoperable. But that's again probably a few years out, and I think unless we solve this issue and have a certain degree of trust and confidence in these systems holding up, we won't see any significant value, be it monetary assets or financial assets or even enterprise business processes moving onto these new systems. I really think this takes time.
Yeah, I still remember in 2018 we were talking atomic swaps, and we're talking interoperability. Might have been a little bit too early, but now you're seeing these cross-chain integrations. Maybe pick it up from there, William. Is that the real answer to scalability? Is it cross-chain interoperability?
Yeah, I think what we're seeing among the corporate side is that they're still exploring. I think technically there's no like panacea. There's no like one solution that they're all decided that they love at this point. We've gone from having a blockchain task force in corporates to people actually using it across multiple business units. And so there's pilots, there's some implementations, but right now there's no one solution. They're actually using lots and lots of different things, and the funny thing is oftentimes one side of the company doesn't know what the other side of the company is doing. Where we kind of fit in is we're trying to bring startups to bring outside innovation into large corporates. That's always an interesting task, and so you can say the decentralization of decision making within corporates is kind of useful for us because they're not centralizing. Most companies are not centralizing those decisions, so that's helping with adoption. But right now there's not consensus.
Yeah, fair enough. Gijs, anything quick thoughts from your side?
No, I was laughing when I was listening to what Alex was saying with regards to scalability, because I used to be a SAP consultant. So my first day on the job, I asked somebody, how can a company build with something with such a bad interface? And the blank face answer I got is it scales. That's it. So companies are willing, scalability is very, very important for companies to start out with. But to add a little bit of nuance to the situation, as I said before, blockchain is a networking technology, and it's better to use it between companies, not even within companies. And at the moment, the private blockchains that are used within companies, like the Hyperledger protocols and these types of things, they provide enough scale for what is needed for the amount of decentralization that is needed. So that's completely fine. So let's put it this way, I can bet good money on it that the technical issue of blockchain scalability will be solved before the culture change between companies changes from competition to co-opetition. I can promise you that much.
Wow.
Maybe adding one more, sorry for interrupting, maybe adding one more point here, just for clarification. So we are mainly talking about scalability in the sense of raw technical scalability, throughput of layer 1s or layer 2s or whatever you have. I think that's a little bit limiting, as scalability is, in my view, something that is much broader and needs to include not just the core infrastructure, but also tooling around it, APIs. How does the new stack interact with any existing platforms, if at all? It's also about UX for developers and users and new standards. So if you take all of that into account, I think the problem of scalability is even a little more complex. I wasn't articulating this clearly, so I'm doing it.
No, I do see where you're going. Also for enterprises, right, to connect their legacy APIs with Oracle data infrastructures. That's very much a control consideration, right, and giving up some of that control to third parties. So no, I do think that you're striking the right chord there, Alex. I would like to, as for the last question, because we are running out of time, I would like to give you all an opportunity to wear your hat as the VC that you are, and basically reflect on which industry vertical you'd be most excited about in the coming 4 years. And also, if you can name one project that you're most excited about. Starting with you, William.
Yeah, sure. I mean, so coming from a very traditional finance background, my clients used to be hedge funds, and my coverage space the last 5 years at Deutsche Bank, when they still had equity research, was Asia Internet. So it was kind of like the Wild West. People didn't understand China, different legal system. And so we're kind of seeing that with my job was to try and get mostly hedge funds out of mostly New York, San Francisco, to invest in Chinese internet companies. And it was a bit crazy. We're trying to do the same thing now with these, a lot of the same hedge fund names to come in and start trading crypto. Company is called Covario. They're fully licensed. Traditional prime brokerage, so not like a crypto prime brokerage. They're very much a traditional prime brokerage, but they enable traditional investors, hedge funds, to start trading crypto. So they provide the same services as JP Morgan or Goldman Sachs, and think about them as an on-ramp for institutional capital into the crypto space. No, is this going to change the world? No, but I think there's a huge opportunity helping traditional investors come into the space. As we invested about a year ago, the company actually still has some capacity in their round for strategics or for people who can add value. And so we're pretty excited about the opportunity for Covario.
Fantastic, William, and also great to hear that you are sort of the interface in between the hedge fund and the digital asset space. I think awareness and education is very very necessary in furthering the adoption. So thank you so much, William, for all your thoughts. And I'll move on to the next speaker, but we'll be in touch, William. Then over to you, Alex. Like, what industry vertical are you most excited about, and maybe an example of a company you've invested in or are extremely excited about?
Yeah, so I think what is currently DeFi will evolve primarily into what I call open media. That's basically the idea of bringing the composability of DeFi to any form of data or content piece. We've seen that in early attempts with social media platforms like Send, for example, or Async in programmatic art. What I'm mostly excited about right now, what is still an early stage company I invested in a while ago is Anytype. You can think of it as a device agnostic operating system sitting on the new web, integrated with IPFS in the first step, but other protocols later. And they are basically replacing this whole paradigm of applications by openly programmable objects and their relationships. And I think this is, if you look at it as an operating system, this is the necessary foundation to build this sort of composable open media web infrastructure. That's a company I'm extremely excited about.
Fantastic, Alex. Thank you so much. And it sounds very ambitious. And I think the crux is really in keeping it simple at the beginning, but having this wider long-term vision. So yeah, Anytype. I'll check that out. And thank you for being here, Alex. We'll certainly be in touch. Gijs, over to you. Any specific maybe NFT or data plays that you're extremely excited about? Because I know that these are two of the verticals you are, well, I can call you in the middle of the night and wake you up for, right?
Yeah, exactly. Now, I'm very, very interested in the whole idea from, well, data being basically the world's most valuable commodity. But it's not openly traded at the moment. And then on the other end, you've got such a massive transactional enabler in the form of, well, blockchain to start out with. And then, of course, for incentivization, you've got governance and utility tokens. But then on the other end, to really kind of like when the rubber hits the road, when people need to get something that they want to buy, then NFT tokens works a lot better as well for that specific part of it. So I can imagine, and I'm actually writing an article for CoinDesk on the topic, which will be out at the end of year review, is where I see a lot of interesting drivers basically going to go into the direction of data markets will possibly be the next step of institutional investment in altcoins actually. And it's a bold statement, I know, but like hang on for the article. That's the one part of it. But if it comes to projects that I'm really interested in the data space, there are interesting ones. Ocean Protocol, for instance, is a classic already. But I'm actually most interested in a company at the moment called Etherisk, ETHERISC. Amazing parametric insurance. I like it. The whole idea of being able to people with small amounts of money being able to insure themselves against all types of like environmental calamities. I'm calling from South Africa today, and it's super dry. Yeah, and it wasn't always like that. So definitely a company that does that doesn't necessarily just create a new market for people like us to kind of like get involved in, but actually really, really changes lives and livelihoods because of that. Well, that's something that I really get excited about.
Awesome, guys. Looking forward to continue that conversation. Thanks for now. Much appreciated. Andrea, to end off with you in a positive way. I had a call with David Garcia, who is a GP at Capita, last week, and he told me that the EU blockchain accelerator program that you guys are running, and specifically you are running, I think the closure date is today. So I'd be lovingly interested to hear a bit more on which projects that are currently building on top of Algorand, maybe, that you're extremely excited about.
Definitely. So the deadline for the application is the 18th of December. So, projects that still have a few days to apply. The Algorand Europe Accelerator has been a really amazing experience. I mean, it is because it's still ongoing. But, if you think about it, you look at it objectively, it's quite niche, right? Because blockchain is a niche. And within that niche, you focus on Algorand. Then you're asking for projects to basically leverage that. The reality is that, we were really amazed by, first of all, the number of applications. and as well the quality of the applications, because now we are in a difficult position where we need to pick around 10 projects to join the batch that will be announced on the 25th of January. And it's a tough decision because there are many interesting use cases which are quite broad, to be honest. You know, Algorand is true that is very relevant for applications in the financial sector, but it's a very inclusive platform. So even if you do something on, you know, supply chain, on the blockchain, cloud computing, etc., AI, you can still leverage Algorand, definitely. So we are seeing it application really all across the spectrum, and this, you know, makes us, because, you know, we are also investors in Algorand, of course. You know, we're one of the early investors, so we are very happy to see that people start to understand, you know, the quality that comes out from platforms that are really, you know, standing out. You know, because Algorand has been founded by like a guy that won the Turing Award, which is like the Nobel Prize for the computing science. He's like one of the founding father of cryptography. Their economic advisor won the Nobel Prize a couple of months ago for economics. Team X, IBM, MIT. So like, it's really the best of the best that you can get. And now I also like the fact that universities are also getting involved quite a lot. So Algorand now has a formal collaboration with Imperial College London, which is very active. They have a very high-profile cryptocurrency center, and I think that's where you start, right? Because you want applications built by, you know, people that then are going to create the next Google. I think historically this is most likely to happen at the likes of, you know, Oxford, Harvard, MIT, and these like groups of high-profile talents. So yeah, very, very exciting. And you know, the accelerator itself, you know, is supported by the mentors and partners from the likes of IBM, Hamza Web Services, Generali. So, you know, you basically are getting the best of the best in the corporate world and in the crypto space as well. Some very high profile names. So I think all the projects that are going through that, they'll get 15K, like small investment at the beginning, but that's, you know, nothing compared to what they can get at demo day, raise more. And as well, you know, through the other, you know, ways that basically Algorand can support the projects through the foundation, through Borderless Capital itself, through funds, you know, like us. So it's really about, it's very exciting.
Fantastic. Yeah. No, I can see that you need to be impartial, obviously, because you've been narrowing down the funnel of all these applications. But I did speak with two of the projects that made it, either an investment from Borderless or are being involved with the accelerator. And certainly interesting to follow what is happening on Algorand next year. So keep that up. Andrea, thank you so much for your contributions. Thank you all. With this, I would like to end this session. I think this is certainly not the last session on investments. I think we're on the brink of a tremendously exciting year, both when we talk about the COVID situation, but also when we talk about where we currently stand in the state of blockchain. So all stay tuned, and looking forward to continue the conversation with all of you in the coming years. Thank you so much.
Thank you.
Thank you so much, Joeri. Thank you, Alex. Thank you, Andrea. Thank you, Jess.
Bye.
Thank you, William. What a great panel discussion was that, and we kept hearing every word what you said. And Joeri, you absolutely moderated it so wonderfully with putting in the summarization of all the points. And definitely, we'll all stay in touch. Cheers, and thank you for joining us today.
Thank you all.
Thank you.
Cheers, guys.
Cheers.